This is Tipichote, the Liberty Advisor, joined with John Snyson, the Economic Truth. And I was actually in bed about half an hour ago. I was cuddling with my daughter and kind of falling asleep, and then get all these messages on the Discord from everyone that everything is breaking down and everything is going crazy, and we just have so much different stuff going down right now. And actually, one of those is if you are watching this live or you are watching this in the replay. Right now, we're testing out some new capabilities that we have right now where we're trying to make it look a little bit more professional. And so we're recording this live and also streaming out as well. So we're on Tipichote, the Liberty Advisor YouTube channel, also on Facebook right now, just to basically tell people not to be on Facebook. And then I'm having a problem with that restream. Otherwise, I'd be on some other places as well. But yeah, let us know if it sounds okay because we are testing this out. But right now, we have interest rates headed towards zero. And how fitting that we also have Jamie Dimon in emergency heart surgery. And one thing I do want to point out is, and actually there's me with my haircut looking very short, but people thought I looked like a cop in that, so now I'm rocking a little bit longer hair. So the title is from August 23rd, 2019, Negative Interest Rates. It's happening. Negative Interest Rates coming soon. That was a title that Josh made, but in the episode, we talked about how essentially we thought that interest rates were going to be going to negative, and I think one of the comments like towards the end is like, what are you guys, like fortune tellers? And so it's just funny to see how here it is. So why do you believe that negative interest rates are coming soon? Are you fortune tellers? And so I just replied something to the effect that this is aging very nicely for the Economic Truth and myself. So there you go.
Well, and it's not only that. Like I wrote a book back in 2015. That on the back here I said that there's more negative interest rates to come, and that we're going to see interest rates cuts in the coming years very soon. When everybody was talking about raising interest rates, of course, because we knew that what was coming. We predicted the financial crisis. I've written one book that was a little more on the history, but a little bit about the crisis that was coming, and then of course my Canadian book is all about the crises that are coming and preparing people to understand what's going on, because now there was an article here. I don't know if you want me to share right now, Tim. Is that okay?
Yeah, go.
Yeah. So here you can actually see. We're gonna go right over here to my screen. I just want to find the actual one. Where is it? It's this one right here. So, for example, this one says big banks slash prime rates as Canadians struggle with almost $2 trillion mountain of debt. And they're just surprised. Of course, the Canadian Bank of Canada just basically followed what the Fed did the day after and cut 50 basis points, so 0.5%. And then they actually, Canadians are locked and loaded with debt. Of course, they have, $2 trillion worth of consumer debt there. And that's a substantial number for a nation that's, a tenth of what the United States are population-wise. Of course, like Ontario, the province of Ontario has more debt than all of California, which is like at least almost 10 times bigger than Ontario. So it's pretty crazy how Canada is so over indebted. We think that the United States has a lot of debt. Well, Canada has even more, and of course Norway has a lot too, my former home country. But it seems like where you have high taxes, where you have big government, that's where most of the highest debt levels happens, because there's so much manipulation. And of course, like here we have massive bubbles that now is gonna, because here in this article too, it says that RBC and other banks, cut interest rates on mortgages as well.
I think the biggest bubble right now, I mean, you take a look at the United States government bond, and we see that going down to right now, it's at 0.82 for a 10-year bond. We've got right now on screen UK at 0.33.
Right here.
Yeah, I've got the exact.
Oh, you got
the exact same one going right now. So I'm sharing the one I've got, but we can go back to that in a moment if you get some other goodies up there. Let me go. Where is this? And this is a bonus episode. I was literally in bed half an hour ago, and then just threw this on. And Josh and John's like, "Hey, let's go do something this weekend." And we're like, you know what? I got this new setup right now. Let's just go try it right now. So there's literally zero preparation. Not that there's ever really a lot to begin. Okay, you know what? I'm just tired and retarded right now. But okay, there we go. So what we're looking at right now is we got the 10-year at 0.82, the 30-year at 1.44, and this is inverted pretty much all the way around. The only thing that's not inverted, I guess, would be the super long end of the curve, the 20-year and the 30-year. So even the 20-year coming at 1.56, which is higher than the 30-year at 1.44. But going down to something like even 5 years, 0.59. 2 years, 0.5. And this is something that we telegraphed all the way along. I mean, I had a video in 2016 where I had a whole whiteboard, and then on the whiteboard, I literally go, and if you go to my channel, it's, or you're probably, I mean, right now you would be on the channel, I guess, or on Facebook, but it's called Why We're All Slaves to Central Banks. And inside that channel, or inside that video, I'm going through the whiteboard and showing how everything's moving throughout the financial system. And then, basically saying there's no way that these guys, like 2 years from now can go and sell $50 billion of bonds a month. The number one buyer of all the bonds is the Federal Reserve. And now they're going to be the largest sellers. Oh, and on top of that, you're going to have the Treasury. You're going to have to issue $1.2 trillion of debt. And these are the numbers I was using. And that was almost the exact how much the national debt went up last year was $1.2 trillion. So I nailed it right on the nose of that number, said there's no way they could do that. And then they couldn't do it. And then, December 28th came out with a podcast called When's the Next Rate Cut, predicting that the next move would be down. There was a 2% chance. And so John and I are pretty much two of the only guys that were talking about all this stuff. And so I'm going to go to John's screen right now as he's pulling up the usdebtclock.org. Does that one have unfunded liabilities per taxpayer?
Yeah, it does. Let me just pull it up here. I'm just gonna move this out of the screen here. If we go down here, you'll actually see it. Just 1 second. I'm just a little slow here. It's a little late for me too here. If you go to unfunded liabilities, where are you guys? So right here at the bottom. So you can see the total unfunded liabilities when you calculate Medicare, Medicaid, Social Security, and all other promises to pay U.S. citizens. It's 100. The official number is $128 trillion.
Well, they used to have. They used to have a See how it says liability per citizen? It used to have one that said it was per taxpayer, which would be a much more accurate representation of what the true effect of all this would be.
Yeah, because it's not every citizen is a taxpayer. There's a lot of.
They've got crypto on there now at the bottom of there. So if you guys are listening to us, we're going through. No, they do. So go down to the bottom right. It's got some sort of up. The crypto to dollar, right? Or
crypto to dollar. Yeah, or is it on this side, right?
Yeah,
here we go.
I've never seen that one before.
Yeah, this is the new one. They had this for a while, Tim. They actually updated it a couple of 2-3 months ago or something, or 4.
Can you go to the gold where it shows how much gold reserves there are worldwide? Because it's stunning. It would run the government for 3 months or something. And then we can do the math on this. So what's the value? So that's ounces. So 286 million ounces, which could fit in a swimming pool. And what's the price of gold right now? 16. I have no idea what the exact price.
1670, I believe, or around there. Actually, I can tell you right now. Just 1 second here.
So what is it
So right, 78.
It's my calculator's going out to the 11th decimal place. I don't know, what is that like? There's $500 billion of gold that we have. Is that what it works out to be?
Yeah.
And our deficit is 1.2 trillion. So it's half of what the deficit is the amount of gold that we have. I mean, and we hold more gold than anybody else, which is nuts.
Well, do you? That's the question.
Allegedly, even in their best case.
There's a lot of question marks around it. There's a lot of conspiracies around it, right?
It's actually
you had Mnuchin, going over there and saying that there's gold there. Even James Rickards, said that we got a whole bunch. We got all our gold.
Can we do one more? I want to see your pretty face up there. So I want to see if I'm just testing out these new capabilities.
Yeah. So let me remove my sharing. Right. Boom. So here, stop sharing. Here I am.
There he is. Save the day. No, that's or I guess if you go with the Bix Weir theory about that there's all this gold in the Grand Canyon. I don't really know. I haven't really studied that or.
No.
I just heard that was. Something that's
it's an interesting theory, of course, but there could be gold if we pull in, a massive amount of gold, suddenly gold is going to go down. If we suddenly find a massive reserve, actually, there was a
An asteroid.
bigger discovery. Yeah, there was a bigger discovery just recently up at Svalbard, in the ocean of a whole bunch of precious metals, gold and silver and palladium, I believe, underseas, just off the shores of Svalbard in Norway, which is a island that is high up in the Arctic. And they found it there. Actually, they shared the island with the Russians, by the way, and so it's very interesting. But yeah, if there's so much happening right now, and the volatility is just beyond crazy right now, Tim.
Does trading economics? Here still trying to learn this setup over here. Where the hell is it? Okay, here we go. There we go. So you got you up on screen as well, and got the trading economics screen. So does this actually give like real up-to-date futures right now? Because I'm on the stock market screen, and it's showing in real time that the Dow is down 392 because it closed down almost, it was like 969 or something. So that's be interesting if it actually shows.
Well, right now I think it's showing futures actually because it shows
Yeah.
trading in Japan. So right now it shows 149 down on the futures already.
Well, I'm glad you told me about this site because it's I mean, for a free website.
It's my go-to. They have everything basically on that site, and
Yeah,
it's free unless you want to download the data. Then it's becoming very expensive.
But there's actually a better place that they can go. So do you want to get out the Discord so we can go and pimp the Discord, let people know about?
Oh, 100%. This is where you need to go. This is where you get all the good the good things.
Good.
All the goodies. This is our Discord. Oh, hold on here. Let me share my screen. I'll show the Discord here. Just 1 second. Discord is, of course, where me and Tim are, doing a lot of shenanigans.
And a lot of other cool people. I mean, assuming that you think financial nerds are cool people, then you got plenty.
Exactly. There's a lot of us here, and you gotta hang out with us because we're pretty crazy, but we're we know what's happening. We kind of talking about certain moves in markets. We got a lot of people that follows us there because they love our content and so on. And we share a lot. Like here, for example, I just shared that airline stocks are in the bear market currently. They entered it actually over a yearly basis. Monthly change, they're actually down as much as 31.69%. That's pretty drastic, but it's all because nobody's traveling around. Everybody's doing nothing. And then of course we have another one here that I just shared, which is the Nikkei. Just crashed to record lows again over the last couple of months. So the Nikkei is moving down, and then of course it crashed another 2% from when I shared it. And then here we talk about $60 billion that were just added to the markets, and I think it's the repo markets, of course. That's I'm just sharing that here. This is like me just sharing stuff directly from my phone as things are happening, because things are happening so drastically right now that you need to be on board and follow here, because this is like we got day traders here and a whole bunch of other guys that are on here, helping us, giving us data, telling us what's going on, live in the markets, as we are not busy with other things. They talk together. So we're kind of like slowly creating a great community. This has only been going on for like how long, Tim? How long is it since we created this? Like 2 months ago or something?
I think we created it probably right around the new year, and but then I got sick. I think when we created it, and then I got right before coronavirus was a thing. I got my own coronavirus, and I was down and out. And then I had to get ready for the 2 presentations I gave at Acapulco, and I had just a shitload of financial plans I had to catch up on from when I was sick. And then we come back from Acapulco, and then it immediately goes into the world's going into complete chaos.
Yeah.
And so it's just like there's no time for me to catch up on anything. So what we were doing is I went through and probably had I probably have made even this Sunday I had an hour podcast with you for Tim and John show on number 3. Then immediately went into the interview with Kirk for an hour. And then people were like bitching about like, oh, you shouldn't have done this or this or that. I'm like, listen, I went, did 2 1-hour things back to back with, very little prep work, and then probably came out like 7 videos probably last week, and then client specific videos and phone calls and all. I mean, I'd say it's been extenuating circumstances. I mean, we get like day 2 of the year, we get Australia's on fire. Day 3, we've got us bombing Iran or I guess bombing Iran, but inside of Iraq. So I guess Iraq always.
Yeah,
then we got coronavirus.
War between Turkey and Syria, which of course Russia is in there protecting Syria. So basically, NATO was in there because Turkey is a NATO member. They're bombing Syrian bases, which is also Russians there. So basically, it's war between Russia and NATO right now in Syria. And then the markets doesn't really seem to even care about that yet. They're just all focused on this whole Corona thing. But I think the underlying thing is also it's not just the Corona affairs. It's really putting a strain on the already strained economy, and now corporations are going to struggle heavily. And what is that going to cost him when corporations struggle heavily? Well, something else is going to blow up, and I think it's the collateralized loan obligations that's going to blow up, because all the underlying debt that is supposed to give it there any validity of existing is collapsing slowly in front of our faces there.
And and you just keep talking, because I was behind the scenes. I was setting up a whole nother scene from scratch right now.
But if you guys can see on the screen here, you can see that the Nikkei currently is down 3.09%. It's monthly, it's down 13.29%. We're moving down here. Actually, Bangladesh is in the bear market right now. The Bangladesh, and they are also mass producers of products, especially textiles. In the world, they're a textile hub of the world, where all the slave labor and everything is happening. To get us some nice clothes. Another place that's heavily another place that's another place that's really crashing, Tim, is Lebanon. Look, the Lebanese stock market is down, but of course they have bank runs there. The economy has completely collapsed. Banking system has collapsed over there. They're looking at IMF loans right now. So you're seeing some periphery activities here in the weakest, smallest economies that are starting to get hit heavily here. And then, of course, like over time, it's going to trickle. But you're seeing a lot of them are moving into close to bear territory here. And this is some major, like Egypt isn't a small one, or Nigeria isn't a small stock market. They're decently big, actually. They're part of the 3 biggest in Africa. They are close to bear territory here, so there's a lot. And then Laos, of course, their stock market is entering. So there's a couple, starting to move towards something there. What is BSX? Is that Bermuda, Tim?
I think fucking Laos. I knew it.
Yeah. And then, of course, here, and Chile, we can't forget the protests in Chile.
Is Zimbabwe still up? I think Zimbabwe was like the only one up last week. It was up like 60% last week. I think they were like all the way at the bottom. It might. Well, I mean, it is Z.
Oh yeah, they would be a hair, of course.
Oh,
yeah.
Boom! They're up. What is it? 223% year over day, but with an inflation rate of
monthly is 41.
But in U.S. dollars terms, is probably still down 99.9999%.
Well, it's funny. This is another thing too. We gotta look at this one. I just gotta mention this because this is just hilarious to me. And we're gonna go to, where is it? Here, Venezuela. So the Venezuelan stock market is on a rip again. It's up 963% year over year. You should really invest in the stocks there in Venezuela. It's a huge advantage to do so.
Huge.
And I don't know why you're not investing in Venezuelan stocks. Is my question. No, that's the thing. So they had a collapse in their currency. Actually, I'm going to show you right now as we're live, because this is pretty cool. You can go and follow what we, do behind the scenes usually when we go and pull up data. Take a look at these two peaks here. So actually, I'm going to go 10 or even 5 years.
I'm trying to
Hold
make it
on,
so we can see your screen even bigger. So I'm removing a lot of the extra fluff.
I'm going to go to 5 years. Yeah, you can see it a little bit better. But so this is interesting. So somebody told me that, like all the Venezuelan bolivar is making a comeback again. It's like, no, it's not. Because in 20, as you can see here, in 20, do you see the stock market here just going, haywire, basically, up to 500,000 points and then dropping down to basically zero. I think, let's see here if we can even pull any data. Yeah, 4,000, it collapsed from 500,000 down to 4,135 on November 6th, 2018. So that was a big drop. That was 99.90% drop, Tim, in the value of the stock market. And but so what happened was that at that time when that happened, the Venezuelan bolivars fuerte, which was the currency, actually collapsed, and stock market was on a rip, as you can see, like crazy gains, right? But it was a hyperinflation at the same time. So like within a year, always hyperinflations happen or less. That as soon as the trust breaks between the people and the currency, it's a game over for the currency. And as you can see here, it was. So yeah, what happened to Venezuela? Is the Fuerte back again? No, it's not, because it's a whole brand new currency, and the currency is called the Soberano. Actually, the Venezuelan Soberano. I have that in my report that you can get as well, my 2020 Global Risk Report that's available on my website. But in there, I talked about, the two failures, because now it's actually the Soberano. If you go to currencies here, I'm actually going to move to currencies. I just want to show this because this is important to what potential outcomes could be when you have guys like Ben Bernanke saying that the pressure of the printing presses will always assert itself, kind of thing. So I just want to show you what happens in a real, pressurized market, Tim. When you have, so we're going to go to Venezuela, just 1 second here, let me pull it up here. Here's the Venezuelan currency. So let's see if we can actually get the data, though this might only be the Soberano. Tim, just 1 second here. Yeah, you know what it is actually. It only shows the current.
And this is in local currency. So
yeah,
and that's the important thing is that it priced in dollars. I mean, we're looking at a complete collapse of all this stuff.
Well, yeah, and this is the new currency that they implemented. They revalued their currency, and they currently have just over the last year, they're up to 2,118% inflation already on the second currency, the Soberano currency. So it's stupid. It's like during the French Revolution, they had, I believe, the livre, and then they issued the assignat after the livre hyperinflated, and then the assignat collapsed pretty fast after. Because if the government tries to issue another currency, the people have just currently gone through hyperinflation, and many people died because of it. And you think that people are stupid enough to jump on the other currency? No, and of course that's what you see with the Soberano. It's basically people's like, well, we're not going to use this piece of garbage. I'm going to wipe my ass with it maybe, but that's about the the extent that this currency is usable for.
And actually, even that, who knows? That might be coming back into fashion, because we saw. I got my buddy Dr. Frank, who was just sending me some pictures where his wife couldn't actually find toilet paper at the store that she was just at. So apparently, that's going on right now in America. And let's switch over to right now. But John, do you want to go back to your beautiful face so then we can see?
Yeah.
Okay, so we're still testing some things out right now. Boom. So right now we've got interest rates head towards zero, and Jamie Dimon emergency heart surgery. So let's watch the first one. And this is on the top of Drudge too. So we got Bond King Gundlach says Fed panicked and short-term rates are headed towards zero. Obviously, this is something that John and I have been talking about for a while, that the rates were headed to zero. I literally got in trouble in 2011 for telling a client that there's no way they could ever raise the rates. And if they did raise the rates, it would just be a token raise, and that then they would have to then cut the rates again. And I got in trouble for saying that because like, oh, you're not allowed to prognosticate and all this other BS. So you've got Jeffrey Gundlach, he's one of the guys who I probably respect almost more than anybody in the investment, at least of like the head honchos, because so to speak, because a lot of these guys that they trot out there for CNBC or CNBS, I like to call it, I don't really respect too much, but Gundlach is probably the best guy there. And it was even better because I think at one point last year he got pissed off at Jim Cramer. I want to say like around like October or November of 2018, and he said he would never go back on the network again. And then they had to then do like complete, like panic. I don't even know if he is back on the network. I think he was doing like exclusives for Yahoo Finance just because he was pissed at Jim Cramer. Yeah, here we got the Treasury yield. 2011 was at about 3.6% on the 10-year, and now today we're at, what was it, like 0.82? I think last time we.
I think 0.8. Hold on, I'm gonna just look it up here again.
And for context, Jeffrey
Gundlach, 0.8. Yeah.
Jeffrey Gundlach is the most well-respected person in the world when it comes to bonds. Hand down the most respected person in the institutional space, in the retail space, in the pension. I mean, he is the top guy, and this is the top guy telling you that. And then speaking of top guy, the head of this entire global financial system is JP Morgan, and then we've got Jamie Dimon having emergency heart surgery right as the Fed. You know what? We haven't even talked about the Fed's emergency rate cut. So here we are talking about whatever shithole currency you were just mentioning.
We'll talk about. We'll get into the weeds here with the repo market. What's currently happening there, because there's also some interesting stuff.
We're gonna get into the weeds.
Well.
Let's give the listeners a little backstory. So right before we're about to come on live. Initially, like mind you, I was in bed. I've got pajamas on. I just threw on this top right now, and John goes, okay, we'll just go live for 10 minutes, and I'm like, dude, 10 minutes. I'm like, what?
What are we at now? Like half an hour soon.
When have we ever been able to go on for 10 minutes? What's one subject can you possibly only mention for 10 minutes? I'm like, that's a lie, and I know that's a lie. That this is gonna. And then here you are like, oh, just hold on. We're not going to talk about that now. We're going to talk about that 20 minutes from now when we get into the weeds. It doesn't talk about that for more than 10 minutes. So Morgan says CEO Jamie Dimon is recuperating after emergency heart surgery. This is news as of right now. So Morgan said Thursday that CEO blah blah blah. Co-president Daniel Pinto and Gordon Smith will be jointly leading the company as Dimon recuperates. And actually, JP Morgan Chase and specifically Jamie Dimon are pretty much the main culprits of all of this repo madness to begin with. So if you take a look at how all this began, it was like September 17th of last year, or maybe right around that time. And what had happened is the overnight lending rate shot up to over 10%. So the banks had to pay 10% to borrow money overnight. They could have went to the Fed at the time and gotten those rates for about 2.25. They chose not to because then everybody would have known that they went there. Just like a week or two ago, Jamie Dimon was talking about how they should basically like ban the ability of taking away the stigma from people doing that, or from people knowing that you went to the discount window. And the reason all this happened is because JP Morgan at the time had excess reserves. They also had a lot of assets in shorter-term bonds. And so then what they did is those shorter-term bonds are counted differently than longer-term bonds. And so in terms of reserve requirements, they moved those shorter-term bonds over and then invested into longer-term bonds. Now all of a sudden, those extra funds did not count as being extra funds. They didn't have extra money to lend out to the system. Then the system started panicking. They couldn't fund everything. And the rates between the banks shot up to over 10%. Now, in my speech from Anarchapulco, I go over all of that in great detail, so I'm not going to rehash every little bit right now. I would definitely recommend you guys go and check that out. But it was JP Morgan and the head of it, Jamie Dimon, who probably made that decision that then sort of kicked all this off to begin with. And so isn't it very fitting? And not that I'm trying to wish ill will on somebody, because the last time I did that with John McCain, my dog ended up dying like immediately afterwards. So not going to wish any ill will on him, but I wish he would just stop motherfucking the entire planet, if I can say that without having any bad karma being directed my way. So sorry for that rant, John. But
well, yeah, he's a scumbag. That's what he is. No matter if he's sick or not, he's really destroyed the whole world. And I want to actually can I go back to sharing again, Tim, if that's okay? I'm gonna just show our people something there. So here is the actual list, and this is from the Financial Stability Board. They create a list every I think, year of what they call the globally systemically important banks in the world. And as you can see here, you have, well, the JP Morgan Chase is the only and most important bank in the world at the top of it. And then actually there used to be 4 banks at the bucket number 3 here. And they're not there anymore. Deutsche Bank has fallen down. They dropped down here together with, I believe, I'm trying to remember now which other one it was. It was either Wells Fargo or it was Goldman Sachs that was up there with them at bucket number 3 here. But it just shows you the additional capital buffers that they have to have in reserves in order to be fully functional and operational. And as you can see, there's very little leeway, and nobody cares about these banks here, which is massive banks. You got Toronto Dominion from Canada, RBC from Canada, you got Morgan Stanley down there. Like, all these banks are systemically important, and a lot of them are struggling. And then, of course, you got Wells Fargo up here, one of the most corrupt banks in the world right now.
Let's give a shout out to Dan Dix, who I guess it was 19 minutes ago, but said, "What's up, fellas?" So, want to give a shout out to Dan Dix.
Hey, Dan.
And looks like Charlie Robinson is like this as well. And then we got my buddy from home, Greg George, and then I think Nadia Supreme. I'm not sure how to pronounce it. Appreciate the watch. Yeah, we were literally just in bed. I guess now it'd be like 40 minutes ago, and and just decided to just do this because we've got markets crashing. We've got the DAX is down 1.5.
Yeah, and I wanted to show you something, because this is the DAX. This is where one of those scumbag banks are hiding. Let me just go here. I'm gonna go and find my favorite bank, Lehman Brothers 2.0. Still I still highly suggest that this is gonna be Lehman Brothers 2.0. If you go and look here, so we're gonna pull it out to 5-year term, and you'll see what's going on here. Can you see what kind of stock is doing this? Let's just pull back up, because it doesn't make sense. Let's pull back out to all the time. Like, this is how far back now? This is as far back as January 2000. So you can see here at that time, they were up at $75, right? 75 euros. So basically, they've crashed 90% since then in value. And even from the bottom, from the lowest lows of the financial crisis, which was 15, they're actually down 50% from that tip. And that is, I don't know with any other shares, but that to me is not a good thing, is it? What it tells me is that banks are in trouble. And it's not just that. If you go to my page, I'm just going to show you actually where you can find my report.
They were almost at 90 too at one point.
Yeah, and as you can see here, this is my page here. You could go to shop, and then you can buy my global investment risk report. And if you put in TET, you get 75% off. That's $24 or something. And it's a huge deal. In that report, actually, I do talk about all the banks, and there's only 2 banks, Tim, of the major banks that were up. And that was the JP Morgan and Goldman Sachs were the only ones that actually gained. The rest of them are down in the rat and deep down, like Societe. This is the thing. So Deutsche Bank. How many
Goldman Sachs people are in the White House? I mean, it's just. Yeah. I mean, they got even Mnuchin, but which I guess now Mnuchin's like one of the top guys in the Coronavirus task force. So go figure.
But if you go and look at why Deutsche Bank is the biggest bank in Germany. In France, you got Societe Generale, which is one of the biggest banks. What is the common denominators between those 2 banks? They're in the rut. They're doing terribly. But not only that, the most interesting thing, Tim, is that actually they have been used as a bailout mechanism for the ESM, the European Stabilization something fund. I forgot exactly what. The Euro Stabilization Mechanism, they're called. That's basically like a bailout fund. But the problem is, when they bail out, nations like Italy's really struggling now because they have a corona outbreak on top of everything, on top of having a massive debt bubble there and terrible banks. but you have Spain and others. They actually have used Deutsche Bank and Societe Generale to give out that bailout money and give out those loans to those guys, and so they sit on so much toxic, rotten debt, which is just unbelievable that are never going to get paid back. And so people that are involved in stocks and trading stocks, it's basically the market is trying to tell us like, hey, this is don't stay close to this garbage here. And as you can see, it's not. Let's go to 1 month there. You could see, everybody was like, "Oh yeah, Deutsche Bank is recovering. This crisis are averted." People were saying to me, and I was like, I was calling bullshit on that, and then suddenly, right now they're, down again about what is it, 30-something%.
What's
just
so
over
crazy is like before I even met you, my best friend, the guy who I probably used to have these conversations with, my buddy Chris. He asked me after watching the movie The Big Short, he's like, what is your best investment thesis going forward? And at the time, obviously a much different environment back then. I'm like, you know what? And this is not investment advice. I am a financial advisor, so I'm just saying this as a story right now, because in the financial industry is kind of weird about these things. At the time, I go, probably shorting Deutsche Bank, would probably be the most sure bet at this time, and it was probably like $16 at this time. So you would have made over 100%. But I have actually, truth be told, never shorted this stock. It is very dangerous, especially in a era where now I've used different strategies that I've talked about with the video I did with Kirk on Sunday. So I'd highly recommend you guys check out that video. It's probably one of the most important videos that I've ever come out with. So just from an investment strategy thesis standpoint, go watch that one. Not going to rehash that one right now. But yeah, shorting stocks is very dangerous because in a world where the central banks just print tons and tons of money, John right now is showing us, or it was showing us, what the bond yields were. So all the way down to 0.82. And that is just the Fed is going in there. Central banks are going in there, buying up these bonds, and then they're artificially creating that demand, which is then lowering the price. And they're also increasing the supply while artificially increasing this demand, and it's still lowering the price. And so it's all just a big artificial reality. And so shorting in this type of environment is very, very dangerous. So, even though I thought that was my best thesis at the time, and I didn't know who John was, I didn't know who Josh was, I didn't know about World Alternative Media, any of this stuff. And it's funny that here we are on like the exact same wavelength and, not even knowing each other. But the fact that it went from 90, now it's on to 7. And it's a zombie bank. I mean, if they had to pay real interest rates, if they had to pay 5, 6, 7, 8, 9, 10, 11, 12. I mean, they're probably, with the amount of risk they have, I mean, you should be paying 12% or more to own them.
Well, yeah, if we had a real economy, Tim, and real, interest rates would, be out there, we would probably be at, 8, 15, 30% on the U.S. and others because they couldn't pay their debt, and they would be bankrupt. They'd be done. It'd be game over. There would be no way to do this. But no, they were not willing to do that, so they're going to let interest rates drop into the negative. And it says there, just right now, it says that oil prices declined more than 1%. Right now, this is just news out of Europe, because the OPEC is not really figuring out that, that's another cartel. They're working together to cut prices and so on. I just have actually we were talking about Societe Generale, and as you can see, they're not doing very well either. Societe Generale, as you can see, they bottomed out at 16 euros per share, and then now they're at 22.79. At least they're doing way better than Deutsche Bank, but they're still doing terribly. And they're one of the major banks in France, of course. And in France, there's daily protests. And there's a couple of different protesters. There's a protest against the monetary system because people can't feed themselves. There's a protest against taxes because they're taxing people to death on top of it. So it even get worse for people to feed themselves. And then third, their pensions have been eviscerated because they've been basically taking over. All the corporate, big corporate conglomerates have taken and basically, their forms of Wall Street, I don't know what that's called over there in France, but they have basically, put a straw into pension funds and sucked out all the good capital out of those funds, and they're starting to go dry. A lot of these public pension funds, there's pension funds. I actually have that in my report, global report. I show all the pension funds in the United States that are public, and I show you how crazy underfunded most of them are. And I think that's another just massive crisis that are coming, Tim, because everybody needs to withdraw money now from those funds. Who's going to actually? So when somebody withdraws funds out of a pension fund, well, there has to be another side to that, a buyer, but who's going to be the buyer? Who's going to buy all this stuff that will be coming out now over the next 5 years, because pensioners has to retire, right? I think pensioners are going to have to come back to work until they're 70 to 80 to survive, basically, because they want to have money. And especially with the crises that are really starting to unfold there, Tim, with all markets have been almost mostly negative, and then extremely, let's just go to Dow Jones. It's just crazy volatile it has been. Here, take a look at this. We're gonna go a little closer. Let's go to weekly, because you just gotta maybe monthly, it will be a little bit better to show. As you can see, it's been very volatile here. But if you draw it out a bit, you'll see, compared to 6 months, or let's do a year here, you can see the volatility just up and down, how crazy it is. And you can't see any of that really unless you go back to, let's see here. Let's see how it looks actually on this. Look at this, Tim. Look at this hockey stick here, Tim. Here's the hockey stick moment. What do you think about this one, Tim? This is Dow Jones over, this is way back.
I think it happened
1900s, actually, the start of the 1900s.
And it's funny if you zoom into the crash of '87, how far down the totem pole that really is. I mean, if you
you could where is it?
And unfortunately, I can't really see it because I've got my camera right in front of where it is in the screen, but.
Yeah, so if you go and zoom here, okay. Hold on.
This is gonna be a future chart of what Bitcoin is probably gonna look like, in my opinion.
Yeah, oh yeah, most likely. And this is not this always happens, because this is not because the value of these companies that are on the Dow Jones has increased, or that they severely become massively bigger or something. This is because of money printing.
It sounds like you need your money, Ken. I think you're falling asleep.
Okay. Right now, I need this.
Woo! Wait, but no, we can't see it, dude. We can't. We don't. You
hold on.
No.
Yeah,
you've got your screen share.
We need helicopter money.
Hold on. It's still not all the way.
Helicopter money is coming. Woo!
Blew your wad too early when it wasn't. We're not the screen share.
Yeah. So here. Look at all this. Look at all this garbage.
It's dirty fiat.
Dirty.
And nowadays, the fake money actually costs more than the real money, in a lot of places. You go to a dollar store. You go to a dollar store to get a dollar worth of fake pennies, and it costs $2. So.
Well, yeah, the content. And this is the thing. This is why they stopped making pennies here in Canada, because the pennies was worth 3 cents instead of 1 cent, because of the content that was left in it. And mostly actually around the world now, when you look at minting at the Royal Canadian Mint, they just do steel now for minting for all nations. And there's not really any nations that have left any functional money anymore, other than these steel cutouts with a little bit of nice coating on them with some copper, nickel, or whatever they add onto it. So we basically are at the bottom end of the empire, and on this whole global monetary system scheme, and it's coming down to it's really just falling apart right now. And there's no way out of it. I don't know how we're gonna get out of this at all. I don't think it's possible whatsoever. They could go negative, whatever they want to do. They could do helicopter money, whatever stupid ideas they have. Nothing is going to save the economy. It's just very similar to all these other ideas, that they had. Back in France, for example, they tried to confiscate the Vatican's property and then use it as collateral for new money, and that failed. All these stupid ideas. They think that we invented something brand new, but then it's we can print money, so it just ends up being a massive Ponzi scheme. After all, like you can't get away from having the system that we have. And we're basically like locked in a death spiral where we're just slowly dying off the whole currency system. And
Well, it's starting to speed up, so.
yeah, exactly. No, there's just no way out of this, Tim. I think I gotta have to, call it quits right away. But I just wanted to show you quickly
Well,
because
it has been an hour, which is much longer than the
yeah.
10 minutes that we initially.
Yeah.
Well, we knew that wasn't happening.
Yeah, just let's do a quick 2 minute thing on the what's happening at the Fed right now, because the Fed just added $60 billion to their balance sheet from last week, and this was updated on my birthday on the 4th of March. Also, I'm gonna go and look at this is their Treasury securities operations. So this is the outright purchases of Treasuries. So they actually, today they bought.
So we don't have your screen shared right now. So if you want to.
Oh, sorry. Yeah, let's get back here quickly. So here we're gonna go and take a quick look at the Fed. So first, here's the total assets. You see a jump here of about $60 billion that just happened overnight here. Well, over a week, and the reason is here. So if you go down just a little bit here, you'll see the turmoil starting here, right about here actually, and it was on the 3rd. So they had an auction here, this is called term repos. So they actually have 10 days to pay back, 10 business days or 14 days, and you can see it's heavily oversubscribed. So this basically hedge funds, banks are submitting whatever treasuries they want to be able to get the necessary reserves that they need, but they're not able to, as you can see, because they only, instead of 47 billion, they accepted only 11 of the treasuries, and then 23 submitted, and they only accepted 8.47 billion of mortgage-backed securities. And so, and here you can see it's a huge jump also, and this is just the overnight. And as you can see, it suddenly got oversubscribed now, and this is heavy. This is probably the highest it's been since actually September of 17th. I actually think it's the highest it's ever been, Tim. And as you can see, they're doing like a 100 billion they just did here on the 3rd to the 4th overnight, and it was oversubscribed for one of the first times in a long time, the overnights. And then the next night, it was also oversubscribed by 11 billion, and they did another 100 billion, overnight bailout of the repo market. And then you can see here again, it was oversubscribed, another term repo again. So you're seeing things are starting to develop. There's something, lurking under the surface again at the Federal Reserve. There's some bailouts happening again. And here is the actual outright buying of treasuries. So you can see here there was $6.96 billion submitted. Only 1.6 was bought. No taken by the Fed. Here is 21 point. This is on my birthday.
Warning, 3 minute warning. I knew it wasn't gonna be 2 minutes. So.
Yeah. Yeah, and then here you can see it's 21 billion was submitted. 7.499 was accepted. And here's mortgage-backed securities. So you can see the same thing is happening here. There's constantly buying of these securities. So you can see a whole bunch of oversubscription to it, and the Fed only accepts, about 25% or 20.
What time did they release these? Do they have what's the stats for what's going on right now?
Well, this actually, the mortgage-backed securities, they just started up again. It was a little break here since February 26th, and then this is from March 3rd was when they accepted 80 million of them. And then here you can see on the treasuries, it's basically like an ongoing basis because they need to constantly do it because the federal government in the United States is, massive deficit spending.
We need an intern to help us compile results. So if you're 18 years old in college, finance, economics geek, listening to us, reach out to us in the comments, and because it would be cool to take a look at the ones that were expiring after 32 days and line it up to when those 32 days end and see how much needs to be rolled over. And I'm sure there's probably people that have already compiled a lot of this stuff. But let us know what you guys think in the comments. This was literally, I was in bed in my pajamas, actually still in my pajamas. I had no intentions. I mean, I actually took a melatonin sleeping pill, and but luckily John's money cannon helped keep us awake over here. Was not planning on doing this. I'm dicking around looking at
That
Discord.
was a close call.
I'm on zero hedge, looking at all this shit going on. And I'm like, you know what? This can't wait till the weekend. Let's go put it out. And then, so we also, if you guys will take a look at what we're doing, I just realized we're still just have John up there. So if you guys take a look at what we're doing, we also, like in real time, literally just changing some of the stuff around here. We've got like side-by-side views. Let us know if you guys like it, if you guys think it's annoying, what you'd like to see, because we're just trying to make it better for the people. And as we're expanding our capabilities over here, we're hoping to increase the quality. And I think over time, we have increased the quality already. But anyways, let us know what you guys think. Really appreciate everyone for listening to this. Let us know, because this was a complete random, like literally just set this up, went live. I pulled up just like 3 or 4 things that I always just have up, and didn't have any premonitions of what we're going to talk about. We didn't plan anything, just winging it. And initially we were just going to put it out on Twitch, because there's no one following me on Twitch, and we're just going to completely just see what happened in terms of it.
And then it turned into a whole show, didn't it, Tim?
And it turned into a whole show, because the thing is, John and I will have these conversations and none of it's taped. And then the whole time I'm thinking, like, shit, we should have taped all that, because I'm sure somebody would want to watch that at some point. So anyways, this is sort of what we're doing. Who knows, maybe for next time we'll just tape regular like phone calls or something, and then we could put it out like for like premium content, or put it out for content on only the Discord only, or something like that. So yeah, hit us up on the Discord, hit us up on YouTube, wherever we're at. And John, your website is theeconomictruth.org, and mine is thelibertyadvisor.com. And till next time, I'll see you guys later. It's been real, and let us know what you guys think in the comments. Peace.
Bye, guys.